All right. Hello, traders. I'm going to take a look at the put call ratio today, which is one of the most reliable ways for me in order to figure out major trends in the market as it's a sentiment indicator. And I think sentiment is one of the most powerful ways of figuring out major directions. All right. So what you see over here in red is the put call ratio, which is smoothened out as a 10-day average. So this is not the daily move. What happens by that is you get less noise and smoother lines, which obviously is ideal. And the blue is the SPX. And currently, we are now sitting, well, very recently, the put call ratio went down to some very extreme levels. All right, you can see the cursor here. And this is not a good sign if you're bullish, and if you're bearish, it is a very good sign, as a very low put call ratio does mean a lot of complacency in the market. So this was the reading recently, which seems like it's probably topped out. Last time you got something like this was here, and you can see that was right next to the top. Again, these levels are so rare. The last time you got something similar was here in November of 2021, which was a local top. And what followed was the Omicron news and the little sell off that we had. Eventually, the market went just a little higher. You had another reading, which was very low, around about where we are today, a little higher, and that called the exact top. So a lot of these readings over here have coincided to major tops and bottoms. The readings we're getting now are a bit too low, and there's far too much complacency in the market. So for example, you look at that major top that we had in July of 2024, that came at a pretty low reading. Uh, a major top that you had over here in July of 2023 again came at a pretty low reading. Um, a top that we had in Feb of 2023, just before the banking crisis, came when the put call ratio was rather low. And another top here, which was the end of the bear market rally in 2022, came when the put call ratio was low. But what I want to emphasize here is look at these readings, right? And look at where you got this reading here. Again, in Feb of 2025, I had made a video about this. There's far too much complacency in the market, and then we got an epic 20% sell off. Right? So, once again, we're getting some very extreme readings, and this is not a good sign. This entire move, this entire bounce through April and May, it could very well just be a wave two. And I mean, if a bear market has begun, then this could just be a wave two, and the sell-off that we had in March and April was wave one. But let's see. I mean, I'm not gonna. We're not. It's still a little bit too early. It could also just be a B wave, and we get a C wave back down. So this ends up being an A B C flat, right? So A, B, and a C. Let's see how it goes. But the point is, there's far too much complacency. And this is not my only thing. I have some other signals as well. I do follow cycles, and there's a strong convergence of cycles right now. So, for example, if I look at, so there's roughly a 34-week cycle that the market seems to follow. I think the top is in, right? You can see this over here. I think the top is in over here. And so that's that cycle. It's a very rare signal. Another one is, oh, yeah. So another one is an 8-week cycle. But anyways, I won't get into that. The point is, there's a very high probability that the market is topping out. And like last time, we didn't know what the catalyst is going to be. Very conveniently, a catalyst will show up in the very near future, and we should start to see a sell-off in June. My bets on what that would be, I would have to say bird flu. I think we're gonna, I think we're gonna end up seeing some bad news in that space. But regardless what the catalyst is, we would want to be bearish right now. All right, thank you, and please leave your feedback down below.